If you were born before 1965, or you have parents, older siblings, or relatives who were, I need you to stop scrolling for the next few minutes because there are real changes to the Australian age pension and superannuation system that landed in 2026, and a lot of the information circulating online right now about retirement in this country is either years out of date or simply wrong. Some of it could genuinely cost you money if you plan around it without checking the current rules first. Today, I'm going to walk you through exactly what's true, what's changed, what's just noise, and what you need to check for your own situation or your parents' situation right now, this week. Before we start, if you're not subscribed, do that now, because pension and super rules in this country get reviewed and adjusted multiple times a year, and outdated information spreads online far faster than the corrections ever do. Let me start with a quick story because it shows exactly why this matters. A woman in Brisbane, we'll call her Margaret, spent years assuming she had to wait until 70 to access her pension because that's what a forwarded family group chat message had told her. A message that had clearly been sitting around online for years, from back when a proposed increase to the pension age was still being debated. Margaret planned her entire retirement timeline around a number that was never actually true. It wasn't until her son sat down and checked directly on the Services Australia website that she realized her real age pension age was, and still is, 67, exactly where it's been fixed since 2023. That one conversation changed how she planned the last few years before retirement. Stories like Margaret's are far more common than people think, and they're exactly why this video exists. Let's clear up the biggest myth first, because it's the one causing the most confusion right now. You may have seen articles, videos, or forwarded messages claiming the age pension age is about to rise again to 68, 69, even 70. As of right now, in 2026, that is simply not true. The age pension age has been fixed at 67 since the 1st of July 2023 for everyone born on or after the 1st of January 1957, and there is no further increase currently legislated by the Australian government. Services Australia has been direct about this exact point. Some articles still repeat old proposals or outdated future age tables from years ago when the phased increase to 67 was still underway. And readers keep stumbling onto that old content and assuming it's current. It isn't. Use 67 as your number, for men and women equally, unless the government formally passes new legislation changing it. Now here's where your actual birth year genuinely matters, and this is the part most worth sharing with family, because two completely separate ages apply depending on when you were born, and mixing the two up is exactly where people run into trouble with their planning. The first age is your superannuation preservation age, the earliest point at which you're allowed to access your own super, assuming you've also met a condition of release, typically retiring from work or reaching 65 regardless of work status. If you were born on or after the 1st of July 1964, your preservation age is 60, full stop. That's now the case for essentially everyone currently approaching retirement. But if you were born before that date, your preservation age is actually lower, somewhere between 55 and 59, depending on your exact birth year. This is exactly why the born before 1965 framing matters for this video. If that describes you, or a parent, or an older relative, there's a real chance you or they can already access superannuation years earlier than commonly assumed and simply don't realize it because nobody's specifically checked the exact birth year table. The second age is the age pension age itself, and it's entirely separate from your super. This is fixed at 67 for anyone born on or after the 1st of January 1957, and it applies regardless of when you personally become eligible to touch your super. This creates what financial planners commonly call the retirement gap, a stretch of years, often around 7 years for a lot of people, sitting between the point you can first access your super and the point the age pension actually becomes available to you. If you or someone you're helping plan for is heading into this gap, don't assume the two ages line up neatly because they genuinely don't, and confusing preservation age with pension age is one of the single most common planning mistakes people make in the years leading up to retirement. Now let's get into what's actually new for 2026, because this is where real, current, time-sensitive action is worth taking, not just background knowledge. From the 1st of July 2026, the asset test thresholds for the age pension were updated, and these numbers genuinely move the goalposts for a lot of retirees. A single homeowner can now hold up to $333,000 in other assessable assets and still receive the full pension, with the part pension cutoff sitting at $733,500. A single non-homeowner has meaningfully higher limits again, $600,000 for the full rate and $1,500,000 before the part pension cuts out entirely. These figures move with indexation over time, which means if you, or a parent, were last assessed under an older set of thresholds and haven't checked since, it's genuinely worth confirming your current position against these updated numbers because you may now be entitled to more support than you were previously receiving or newly eligible where you weren't before. Alongside that asset test update from the 20th of March 2026, the maximum age pension rate itself increased. It currently sits at $1,200.90 a fortnight for a single person, working out to roughly $31,200 a year and $1,810.40 combined per fortnight for a couple. I want to be clear that these are the maximum rates available. Your own actual payment still depends entirely on where you land under both the income test and the assets test, so these figures are a ceiling, not a guarantee. There's also a quieter change worth flagging if you or a parent is a retiree with money sitting in an ordinary savings account or term deposit. Deeming rates. The rate Centrelink assumes your financial assets are earning you regardless of what they're actually earning, also increased from that same date, the 20th of March 2026. If it's been a while since anyone in your family checked their actual bank accounts against the current deeming rates, that's genuinely worth doing now, because if the real interest being earned is sitting well below what's currently being deemed, that gap has widened with this recent update, not narrowed, and it directly affects how the pension is being assessed. So here's the thread running through everything I've covered today. None of these numbers are secret or hidden. They're all published openly by Services Australia, but they shift on set dates spread throughout the year, 20th of March, 1st of July, and unless someone in your family is specifically checking after each of those update points, it's very easy to end up planning an entire retirement timeline around numbers that are months or even years out of date, exactly the way Margaret in Brisbane did with an old forwarded message. Here's what I'd actually do this week, and this is exactly why the share with family part of this video matters so much. If you or a parent were born before July 1964, go and check the actual superannuation preservation age that applies to that specific birth year. There's a real chance super is accessible earlier than everyone in the family has been assuming. If you or a parent are approaching or already past 67, sit down and confirm your current position against the updated asset test thresholds that took effect this July, because you may now be eligible for more pension than you're currently receiving or eligible for the very first time where you previously weren't. And if there's meaningful cash sitting in savings accounts or term deposits, check the real interest actually being earned against the current deeming rates, because that gap directly shapes how much pension is being calculated. For anything specific to your own numbers, your own assets, and your own family situation, the Financial Information Service through Services Australia is completely free, and you can book an appointment by simply calling 132 300. That is exactly the right place to get your personal figures properly checked against the current rules, rather than relying on an old article, a forwarded message, or a video from a few years back that never got updated when the rules moved on. I want to be upfront about what this video is. It's general information based on current, published Services Australia rules as they stand right now, in 2026. It isn't personal advice, and your own eligibility and your parents' eligibility depends entirely on individual circumstances, which is exactly the kind of conversation worth having with the Financial Information Service or a licensed financial advisor who can see the real numbers in front of them. If this helped clear something up for you, subscribe for more of these breakdowns and send it directly to a parent, a sibling, or anyone in your life who might still be planning their retirement around information that's quietly gone out of date.